Welcome to another episode of Trends and Ideas. I'm your host, Isabel Sender, and our guest today is S&P Capital IQ Director of ETF and Mutual Fund Research, Todd Rosenbluth. And Todd's here to share his views on investing in high-yield corporate bond exchange-traded funds, which are also known as high-yield or junk bond ETFs. So thank you very much for joining us today, Todd.
Good to be here, Isabel. Thank you.
Well, talk to us about what is so special about high yield right now.
So it's interesting in the fixed income world, there's two camps that talk about interest rates, and you need to talk about what's going on in the corporate health side of things. So there's concerns about interest rates moving higher, but meanwhile, the corporate health is quite strong, and we're actually seeing lots of interest in corporate high yield ETFs and corporate high yield bonds, specifically because of that strong health.
Well, I understand that there's also a chance that as an investor, I might lose principal. Can you explain that a little bit? Because most investors may not understand.
Yeah, so bonds are tied to the direction of interest rates. So as interest rates move higher, typically bond prices and bond ETFs will move lower. So the way to be able to analyze that or look at that is through duration. So a duration where you see of 5 years means that for every 100 basis point or 1% move in interest rates higher, that means that the price of the bond ETF could move 5% or 500 basis points lower. So the way to be able to understand that is, one, be aware of it, but then two, try to control your interest rate risk exposure by focusing on some shorter term ETFs.
So how can an investor do that? I understand you might have a recommendation.
Yeah, so there's a number of short-term high-yield ETFs that are out there. One of them is from PIMCO. It's their 0 to 5 year high-yield bond ETF. HYS is the ticker. Duration is less than 3 years. It's an above-average dividend yield. It's actually gathering a lot of assets as of late because of these characteristics of the strength of the corporate health market and the less interest rate sensitivity. So we like HYS as one of these short-term high-yield bond ETFs.
Well, thank you very much for joining us today and sharing your views with us. And for more on Todd's research on funds and his thought leadership regarding high-yield corporate funds, we encourage all of our subscribers to read the Trends and Ideas story on MarketScope.com called Quenching Thirst for High Yield with Lower Duration. Also, please visit the ETF and Funds tabs on MarketScope.com. And until next time, thanks for watching or listening. I'm Isabel Sender for S&P Capital IQ.